Another type of market in the financial world are our financial derivative markets. So these are markets that have different types of securities or standardized contracts that essentially relate to transacting in something in the future. Sometimes these are forward agreements where essentially just locking in a future transaction. And we also have options which are contingent contracts. That is, the future transaction is contingent upon certain events happening. So we have derivative markets. We also kind of split the other markets I mentioned before with our derivative markets. Non-derivative markets, we generally term them together as cash markets, meaning that settlement for these things happen straight away, whereas futures markets, forward markets, option markets, swap markets, that's where settlement happens, let's say, in the future sometime. The settlement of what? Well, you could have future transactions over money market securities, bond securities, shares, equity securities. You could also have future settlement of loan agreements, let's say, or interest rate agreements. You could also have derivatives over foreign exchange, over currency markets, and also derivative markets over commodities. Commodities is an interesting one because this is now, commodities are a non-financial thing, right? But we've kind of pulled them into the financial world through derivatives. And in fact, commodities were really the birthplace of derivatives. Because you can imagine 200 years ago, farmers going to the market to sell their goods. And let's say you go to the market, let's say you go and buy a little baby pigs, yeah? Because what you're going to do is going to fatten them up and then go back to the market and say a year later to sell them. To kind of take the risk out of, what the price will be in a year's time for your big pigs, well, you can enter into a contract when you buy the baby pigs to say, okay, in a year's time, I want to sell these pigs. They'll be big by then. Well, I'm guessing, I have no idea how long it takes to fatten up some pigs, but I'm going to come back in a year's time and I want to, whoever buys big pigs, maybe a butcher, for example, I want you to lock in a contract with me today to buy my pigs in a year's time. And so that's, in essence, is this forward agreement. This is, again, locking in this future transaction, locking in both sides, buying and selling today. And so this arrangement over time, dealers got involved, brokers, and then the banks, and helped turn these types of arrangements into our first type of derivative markets, exchange traded or over the counter. Now, just one last thing to note in regards to our financial markets, and again in regards to this, why we have them, that is, we're trying to get money from those that have to those that need. Yep. One thing to note is that when you go to the stock market and you buy shares in a company, let's say you go buy shares in Tesla, when you go and do that and you pay money for those shares, that money does not go to Tesla. That money just goes to someone who already owned the shares. You're buying shares of somebody else. The only time a company gets money from investors is when they first issue these securities. Now, this doesn't happen on our bond and stock markets. This happens just prior to that, in the initial public offerings. We call this the primary market. This is where companies structure their shares, usually with help from investment banks, and offer that to investors, usually through, investment bank networks, stockbroker networks. When those investors pay money, that money goes to the company. The stock market and bond market are what we call secondary markets. They're there to serve the purpose of allowing those that have the shares to sell them or trade them, so to provide liquidity, and importantly, like I was discussing before, to provide price discovery, so that all the hundreds or thousands or tens of thousands of investors that are trading that security, all of their understanding of the risks in the company are aggregated together into a price, into the market price. And so that's how we get efficiency in this process of getting money from those that have to those that need.
Now, if you're a bit of a finance nerd like me, why don't you check out my Substack? There's a link in the description, and here you'll find additional concept notes, unedited videos, community chats, and much more. See you next time.